First a quick recap to where we're at. I'm not going to go over, the fact that we got weak from Friday. Those that are watching this in the future know that we've come out of some a political environment that has gotten and kept us somewhat volatile. The volume has picked up, the ranges have picked up, the moves have been a little longer, and you want to go with the flow and be able to trade it. Instead of just a grind and a natural progression up, which is tougher to trade and slower to trade, well, tougher for me and others, better for some people who like slow markets, but you're going to want these two-sided type of markets, because a one-sided market, people think, well, that'll be easier to trade, all you got to do is buy it, and that's not the case, and you guys know that. So they've loosened things up, and the tree is shook a lot. Things have fallen off. We broke a real good amount, and some of the fear will subside. We rallied. We're on our highs now. We're coming back from some of the sell-off, gap open lower from Friday to Monday, and some of the sell-off from last Tuesday where we had a big down day as they start to creep and worry about not necessarily healthcare not passing, but what does it mean for future legislation like this big tax reform piece that the market really is priced in. This is going to be a more business-friendly environment because of that piece, right? So is this a precursor for stuff to come, and that's what had the market on eggshells the last week? Well, so I'm not going to cover any more than that. I do want to tell you, make sure that when the market gets more news wire sensitive, you're privy to that. Not less privy, more privy. So you could trade certain remarks and comments as they come across. Very opportunistic trade last week because of this health care bill, and the same is going to come when they introduce tax reform, and they think they have the votes, and they don't have the votes, and it goes back and forth, right? We're going to get this same type of trade for that as well, and then you're going to get tweets and comments from President Trump that do the same. So be prepared for it, and don't worry about what you miss. Just try to miss less of it. Knowing where you're going to get out before you get in is an important saying, because it was the first piece, that was the first thing I was told in the beginning of my trading education career. When I started learning to trade, it was in a pit, because that was pretty much all that was around in 1997. And the guy who taught it said this: know where you're getting out before you get in. And he did exercises in both the first, second, and third phase of his educational program. You paid for the first, and it was several weeks, I think 4 or 5 weeks, then the second, and the third phase. But every single phase, beginner, intermediate, and advanced, all had exercises that were just getting in and getting out, getting in, getting out. And a lot of people, I don't know if you think this, but a lot of people think, well, pit traders were all scalpers. That's the furthest thing from the truth. It's not. But a very early exercise that helped people understand the market. Even if you think you understand the market and have been trading a while, and even if you've been consistent, does that mean you'll never have to practice? Of course not, right? Got to get back down to the fundamentals sometimes. So we would always start out, a lot of the main exercises was just selling it where you bought it where you sold it. So there was no second guessing about knowing where you're going to get out before you get in. You can't manage your risk and be objective about managing your risk unless you have that plan before you get in the damn thing, because you're going to be everything but objective when you enter a trade. You're going to be everything but objective. So in order to increase your objectivity, you need to understand a plan of you don't have to put your stop there. And a lot of people think, well, that's what your stops are for. It's not what your stops are for. I want people to trade without stops and have mental stops. You can put your stops there, but have mental stops. Get good at getting in and out, and then put your stops there. Because the stops really they play a lot of games with you mentally when you put a stop in there. And what do I mean they play a lot of games with you mentally? Well, they force you to have that blinking light of where you're wrong. And as soon as you got that blinking light of where you're wrong, you're making different decisions and you don't even realize it. That's what your stop to get out of a trade for a loser does, that blinking light. So know that when you have your orders in the book to exit trades. Very important saying. And many people don't have an exercise to do it. I don't know if this is going to roll into an exercise, and I don't know how many people do the exercises I roll out. But like I say, with every exercise, or every drill I introduce, I always tell people, if you work for me, you do it. And they'd say, why? Because I'd fire you if you didn't. It's real simple. But I can't make you guys do this. I think it's worth trying to get back on track if you're struggling, or trying to get to consistency no matter your time frame, to work on things like this. But I think something that'll really be powerful and help you is the notion that how to use support resistance, whether they're thin spots, how I'm going to run this session, or your own. Now, let me give me 1 second. All right, sorry about that. I just had to change the screen. I had to pull a couple things around. You'll know why in a second. So what are we doing here? We got a thin spot, but a long thin spot strip. So it's a little more difficult to say where this market's going to come down and stop. Although the top of it would make sense that the green, the strip of green starts down in here, gets fast in here. This was the pop I was talking about before we opened this room. So this area in here is going to have some support in it, right? But this is the point I want to make. A lot of people will stress over, well, Anthony, where do I buy it? Do I buy it at the top of the thin spot? Do I buy it in the middle? Do I buy it towards the bottom? Boy, it'd be comfortable to buy it at the bottom, wouldn't it? Because then I could be close to managing my risk and everything else. And those are all good questions. But the question has to start is not where you buy it. Now, again, we're going off the premise of getting long, right? The question isn't where to get long. It's where to get the hell out if you're wrong after you get long. That's the question. Where the hell to get out? That's the whole premise. Know where you're going to get out before you get in. This is a long strip of potential support, but you're going to get out down in here. That's what you should ask. And a lot of you do ask that. Where do I get out? Where you get in is skill development that you have a whole course to learn from and execute and find good triggers to get you in. Correlations is my favorite. Where to get in to catch a turn. So the point I'm trying to make is, I don't know where. Sometimes it's going to be the top of the thin spot, it's going to be the middle, and sometimes it's going to be the bottom. But if you always want to do one thing, you're going to have trouble being consistent. You have to find a way to qualify what part of the thin spot or where and what exact price you would get in with the flow, what's going on in real time. Correlations help me the best. Could be some sort of delta analysis others do. That could be the best real time moment to jump on. Could be a stuck short if you want to buy it. Could be something other than an ancillary. My favorite is a correlation. So I'm looking to buy it, but when? And I see a correlation pop just to catch that edge. All right? The point is that we all know where we should get out. And that is when the thin spot is breached below. Now, this is a long one, but I'm just using the most relevant thin spot that we have in real time, and it comes back in here. And the top of the thin spot has worked well. So let me go in here and do something that it probably won't work, and that's good because I don't like to be long here and get out way down in here because that sucks. That's about 2.5 points. That's 10 ticks. You shouldn't have to risk 10 ticks to catch some upside. But you could see that they're piling in a lot of volume in here. And it's the fourth rotation. So there's some risk in buying in here. They might dig a little deeper. But let's go to some demo price ladders. This is the Market Delta Cloud. I don't care what anybody in this edge course uses to enter or exit. Dome-wise, platform-wise, doesn't matter. but it better be simple. I like simplicity, right? I like simplicity the way I use footprint charts and delta stuff and everything else. And I like simplicity where, where I click and orders go in. I could cancel all. I could click on it. This is the NASDAQ. And I was hoping we were moving a little faster for this demo. But if you look over here, this is the E-minis and this is the NASDAQ. Just using the NASDAQ next to the E-minis. And this is an important feature to practice on. I wouldn't practice in real time, but I mean with real account, because you're supposed to lose money in doing this. You're supposed to lose money, but you're supposed to get good at buying the turn or selling the turn. So if I get short, it's going to show up right here. I'm -1. I'm going to try to scratch it. So you want to buy it where you sold it. This was part of our exercise in the pit training classes, just to get good at getting in, getting out. See, I got filled for a scratch. All right. So my point is that we're coming into a thin spot. How can I do this to show it better? Hold on a second. We're coming into the fourth rotation into a thin spot, but I think it could sink down a little lower to maybe some of this size down in here. And then we'd use the NASDAQ to get in. Now, all this might not happen, but I just showed you the thin spot. Watch this. Right here. And so this thin spot comes down. See, I got my domes usually on another screen next to this. I'm trying to figure out the best way to show you guys on one screen share. Let's do it like this. Aha. No, it didn't work. All right. This is the E-minis and this is the NASDAQ. So far, so good? Now, context. We drilled into the top of this thin spot 1, 2, 3 times. You see these 3 rotations? We're letting out some volume. It's a little risky to buy it here, I think, because we could dig down. This is a wide thin spot, right? It's almost like back-to-back or thin spots on top of each other. So let's just say this one is in here. Let's just buy it. We're trying to buy it in here, correct? But we're trying to buy it with another reason that this is going to work rather than just price. So if I'm not trading well, I'm just playing price, and it still might work, but I'm trading better if I'm using an ancillary, let's just say like the NASDAQ, because the DAX is closed. This is why it's better for me when markets are trading faster, because this stuff will keep me in or out. So if I'm going to get long at 49 even, my initial, I don't want it to go below this thin spot, which is 49 even. If I'm going to get out below 49 even, let's pretend this thin spot doesn't extend all the way down in here, because it's got fast in there and then it got fast again in there. So I'd puke this thing at 48.5. So wherever I get in, my ultimate risk is below the thin spot. Okay. So far, so good. So far, so good. Yeah, you gotta stick with me on this one. We already missed a rotation because I'm talking, meaning the thing dug down to 49.25, traded 143 times, and rallied up. I'm not long, obviously, but if I was, I'd get out below this 752 because that's where it's going to stop. So this is what it looks like on a dome, correct? And now I've got a little structure to this thin spot. I know that the top of the thin spot has worked a few times for rotations. I know this one's somewhat worked for a little rotation. So I got to be careful to buy it knowing that it's tapping onto the ice. But for just exercise sake, we're going to look for a reason to buy it other than just the thin spot. Man, there could be a lot of reasons. We could go on for a long time with this session, but I want you guys to take some of these reasons and do the drill yourself. I'm just trying to use the NASDAQ right now. as a reason to say when to buy it. I know I'm going to get out below 48 3/4, but I'm a little suspect buying this thing because of all these damn rotations. So I'm going to be a little careful. And if I got a big spike in here, I could just buy it. So let's say this was something I wanted to. He just came out with a comment, and I was going to say, well, let's say that was real bullish. That was a reason to jump on and buy this thing. When it's slow, I want people to. You're supposed to play it from the long side in this particular drill, right? We're qualifying a buy side thin spot. So what I want you to do is, there's nothing going on to get us in, so we can't force something to get us in. So what I want you to do, this is what I want you to do when you're trying to practice. You're trying to get long bids and scratch them. You're not trying to make money. See, everybody in demo tries to make money, and you got to do the opposite of what people use demo for. They want the demo and the sim to make money, correct? And then when they make their money, they go real, and then they don't make it. They don't understand why. Do the opposite. So we just came in here, went 49 half offer, went bid, meaning 49 halves went bid, 49 3/4 went bid, and nothing's really going on. I'm waiting for this thing to kind of come down quickly, and then I'd buy it. But I don't want this to be a trading exercise to make money. I actually don't want to make money on it. I want to buy here. I'll rest 3 trying to bid it, and if I get them, I'm going to scratch them right away. This isn't catching the turn. This is just resting a bid because you're patient, right? You're into this thin spot. But if I get filled, okay, I want to scratch them right away. I've only got them lined up for 1 lots. That's it. So I got to click 3 times to get 3 in there. You should know what you need to do to sell it right away after you buy it. If you don't, there's an issue with your skill set. You see this up here? It'll light up plus 1, 2, or 3 once I'm long. All right, I just bought the 49 3/4. What do you do right away? You got to scratch them. As soon as you buy them, you got to try to scratch them. I bought the 49 3/4. They went offered. I'm trying to scratch them, not getting filled. You don't want to lose more than 2 ticks. There, I'm going to lose at least 1 tick. Got out. You don't want to lose more than 2. If you lift an offer and it does not go bid, you don't have to hit the bid below you to get out, but you can't lose 2. If you lose 2 ticks, that's not part. You've got to add up how many you're able to scratch. I'm trying to buy these every time they go 49 3/4 offer and then scratch them right away. That one I scratched. First one I take a -1. I'm not trying to catch this thing for this exercise. At the moment, it's going to jump. We'll be sitting in here staring at stuff forever. Unless something happens where it jumps. There's so many cool things when you start doing this. When you start using demo the right way. There's so many cool things that you could do with ancillaries to help you. Like if you're good at somewhat quoting the market, it's 9/4, 9/2. Look at this come off a little bit in here. You could just practice at catching turns. All right, it's 9/4, 9/2 bid offer, right? And the NASDAQ is probably moving lower for them to start trading these 49 quarters, right? Well, they're trading the 49 quarters. 49 quarters went offer. Why'd they go offer? Because they're hitting this NASDAQ a little bit. I'm trying to play this from the long side, and this keeps scratching it. Here, I buy 3 there. I get them. Sell 3. Got them. Practice just scratching. I don't want to buy these 3 here because there's 300 there. Does it make sense? It's a little more risky when there was only 70 there. Practice scratching. And you don't take any more than a -2. So this is a -1. If I buy 3 here and I can't scratch them, right? So I'm long 3 right there from this price. And I can't scratch them automatically because it's offered, right? So I got to watch these 49s, and I'm like, I'll try to scratch them, sure. But if I don't get filled, I got to hit these 49s because I don't want to have to sell 48 3/4. There I got scratched because I can't take a -2. This isn't, and I got to repeat this a million times, this isn't how I want guys to trade. This is the way I want you to practice. I don't want you to get good at taking, I don't want you to take -1s and 2s if you want to trade on a longer time horizon. I just want you to know at the very moment you get in what you're looking for and trying to get better at the timing. This goes to knowing where you're going to get out before I get in. Where am I going to get out? At the same damn price I got in. Here, I'll buy these 49 3/4. I sold these 49 3/4. Because it's demo, it didn't do. So here, let's say I oversold them. It didn't pick up all 3 of my buys. So I oversold them. I got to buy 2 to get the hell out. If I don't, I can't take any more than a -2, which means I got to think of buying these 49 3/4. I'm okay because there's only 150 here, 370 here, but I'm on the button. You see how I'm ready? I got filled on one of them. There's one left. Missed it. This is what I say when you hear me say I missed it. The price above me went bid and I didn't get out. NASDAQ is slipping away from me. They're trading these 49 3/4, but not enough to fill this one lot. When you click too fast, it didn't fill and should have all 3 of my buys. So when I sold 3, got me short 2, so I had to buy 2. Filled one of them at a scratch. The other one is working this -1. I want you to scratch. I don't want you to make money. I should get them now. How do I know that I should get them now? Because the NASDAQ just went down 3 ticks. This was a real account. They trade enough. Here, 49 3/4 are trading. See, now I didn't get them. I don't know if because it was on demo or not, but I didn't get them and I should have. Oh, I missed them. You see, I just missed them. I bought them and I missed the turn. This would really aggravate me in real life because number one, I oversold a long position and not on accident. It was because the demo didn't pick up the 3 buys. Now I'm chasing a position. Here, I got them. Chasing a position you shouldn't have on. That'll drive you nuts. All right, here. This is what I want us to do here. If you're looking at rotations, right? You're trying to buy the rotation down and scratch it. Now, let's just say we think that this 752 over here, down to these 2 reds over here is going to be some overhead resistance. And we want to get short. We're going to play the top of the range. We think that this market is going to consolidate, and that's what we're going to want to do. I don't like to trade this way. I don't like to trade the top of consolidation on a slow day, but for practice sake, we're going to do it. But we're not supposed to make money. We're supposed to scratch it. So if we hit a bid, we got to get the hell out right away. If we rest an offer, we got to get out right away if we get them. We're working to sell 3 at 49.5. We're not getting them. And I was talking instead of doing, but this was what we were, see this 752 here and here? What we were trying to see is if it rotates in here, play it from the short side to just practice visualizing what this rotation is going to look like. All right, let's speed this up now. It's the bottom here, 48 even. All right, so we missed trying to sell it on the way down. So we're going to buy and try to scratch every time it turns and goes. There we go. There's another scratch. It should fill me with 3. There it is. Fill me at the wrong price. I bought 49 evens, not 48 3/4. So this should be the bottom of consolidation, and they should walk up to 49 3/4. Play it from the long side, see how many you could scratch. Scratch those 49s. I did it twice. If something moved to get me in, I'd do it. I'm just playing these prices going back and forth, right? So if I'm resting a bid to try to buy 49s, if I get them, I got to sell them right away. Most guys are going to use their demo to make money. It doesn't work. Because as soon as you start making money, it gives you false, see, I got filled and they offered it. I'm able to scratch it right away. As soon as you, what's the point I'm trying to make? Soon as you start making money on sim, it gives you confidence, but it's not real confidence that you know how to execute. We're trying to sell it from the top on the top of rotation, but didn't get any sells out. I'm trying to buy it down in here, and I'm able to scratch almost every time I do it. And if you're able to scratch it easy, you're kind of feeling like maybe it is the bottom. and we'll rotate into the 49, 3/4 area. How do I know that? Because that's where this red came out. There's that rotation. And if it's hard to scratch in this exercise, you know what? You know you're trying to buy something that is falling hard, and you got to chase it each time. Your feel will become better. You'll know how to feel. I bought two. I'm trying to scratch them. I scratched them pretty easy. Does that make sense to you? This exercise will get your feel better. If you're able to buy and scratch easily, like you see me doing, that means you're probably catching a good area of support. But in the exercise, if you're buying and you can't scratch it, then your feel is, holy, I'm not able to scratch this easy. So you start to actually get a real emotional feeling and know what it feels like. So here, I bought two at 49 3/4. I could not scratch them, and now I can't scratch a tick below it. I'm probably there. I got a -1. I'm probably buying it somewhere where it's going to go and stop, and that's what happened. If you look at the chart right next to us, it rotates back up, and now it's heading south. Not very practical. That's what I like, Tom. That's what I like what he said. It's a very terrific exercise, very practical. In this business, take the theory that you've learned about and do the opposite. And I think that's what makes everything we do here, for someone that's new, it makes it different and new to them. How many guys would agree with that? When you found me, it was different than anything else you found. And that's what you want. So most people on demo, what will they try to tell you to do on demo? Work your strategy and practice. And so you start making money go real, and then what's the story? You made money on sim. As soon as you went real, you lost money because you're using sim for the wrong things. And then you see, you go with it. Now it's boring. It's harder to do this when it's boring for me. It might be easier for you guys that are newer to try to do an exercise, but all we're doing is a rotational exercise. Practicing getting short and scratching when it's up near the highs of potential consolidation. It forces you to read the consolidation. Look at my arrow. It forces you to read it and to know that you're probably catching the bottom of this uptick in this rotation. So now it rotated, stopped in here, rotates down. If it's going to remain choppy, it should stop in here and rotate back up. My job is to scratch or lose money in this exercise. So I bought three, only two went in because it's demo. Now I'll try to scratch them real quick. Can't do it yet. 250, but then you could read the book too, 200 by 290. So a lot of demo is going to sometimes be a delayed, but I don't know if you want to take a real account and try to lose money. You're going to build up your commission. So I can't scratch this. It's not as effortless to scratch this as it was the prior two. I'm watching one ancillary, not too many. I'm limiting myself and watching other things, but in just for exercise sake, I'm just watching one thing to get me comfortable or uncomfortable. If I see this dance lower, I'll try to sell it one tick below. If I see it move up higher, I'm confident that I'll get these. And if you're confident you should get them and you don't, look out. See, if I see the NASDAQ uptick and I'm not getting filled, I'll get a little nervous. I got one of them. Now I got both of them. Now I think there's actually, let me open up this chart. They're just chipping into these thin spots, right? What's this guy right there? 47.75. I think that we could come off. Yeah, sell stops. So here's what's going to happen. We're going to come off 4 or 5 ticks pretty aggressively. So I don't want to make money. I'm just going to play it from the short side and keep scratching. This NASDAQ, there's a chance this NASDAQ gets hit. There, I sold one. I could scratch one. That'll fill me right there. So I got short. I'm able to scratch it pretty quick. Ooh, Yellen's talking. Watch this NASDAQ. It's got sell stops full like 94. So if you're playing the downside, where are you wrong at? Know where you're going to get out before you get in. In this exercise, it's the same price. It's supposed to be the same price. If you're trying to take this for a winning trade, it's these reds in here. I don't know if you guys are looking at this the same way I am, but if you draw a line across the 49.75 where these reds come in and they turn it, right above there, the bulls will take the leash. Well, if the bulls got the leash, I don't want to be short. I'm waiting for the NASDAQ to lead for some downside. Because if I showed you, did I show you this chart? I pulled it up. You see all these lows here? At some point through 93.75, they'll take them out. Well, you got to play it that way. Someone's saying they're seeing the rotations decline. Well, then just play with this exercise. Play it from the short side. But the closer you are to the previous rotation, the more comfortable you should feel. So the NASDAQ tested those 94s, and you see it come back up to 96. Hasn't went through it just yet. Definitely. When you see, here's a good point by Bruce. When you see the bid offer get below 100, you could key on that as to when to try to buy it. So when you do this exercise, don't worry about what you miss, like if there's a move or whatever. But the faster the market moves, the easier it is to key off of ancillaries and buy the turns. But that's a different exercise. Like breakouts. Practice buying breakouts. What does it feel like? Anticipate and buy the breakout. So if you wanted to buy this thing, you could either rest a bid. Let's say you want to get long at one of these two prices. You could either rest a bid or buy 48.75 when they turned, but you'd have missed it. There, I got them. See if I could scratch them real quick. Do you see as quickly as I put the order in to buy it, I put the order in to sell it? I didn't get them though, and they built up. This will help you read how orders come in and when they're BS and when they're not without you even working hard. I was able to scratch it. Now I want to get short, and I want to scratch it from the short side. I was able to do that. I sold and bought 48.75. So in this whole exercise, I've taken about 7 or 8 scratches, and I lost 1 tick on one of them, and then 2 ticks on the demo mistake it made. And it's all right to take -1s. You want to avoid the -2s in this exercise and stack up the scratches. But you decide what to do. Like if you want to play the bottom of this rotation, then play it from the long side. If you want to play when the market's moving a little faster, you could play like, let me put a pen on this. It rallies really fast. It leaves a thin spot, right? Comes down. You want to play it, this exercise, buying it when it approaches the thin spot, just getting in and scratching, knowing that that's your ultimate loss. And who cares if the market, like you miss some opportunity with the market. Well, I should have really been trading it. There'll always be these situations. There'll always be these opportunities. See the NASDAQ take off as I'm drawing here? So let's just say I'm going to play the NASDAQ and I'm bullish now. I thought we would go down 4 ticks. Don't think that anymore when it moved from 94 to 96. Makes sense? I didn't think it was going to do that. Or I wasn't as bearish until we broke out at 94 in the NASDAQ. Look at this, how badly this is missed because of this jump. Let's tighten this up. So what do I want to do? Do I want to buy it here? I don't. I want to buy it come closer to 49.5, 49.75, but then scratch it. If I buy it here, I got to scratch it quick. You got to scratch them all. I'm not even getting filled trying to buy it. I wish I wasn't drawing there, so I would have showed you how to buy a turn. Personally, if I was trying to make this, if I thought this market was going to pop, I wouldn't want to buy it after it ran 4 ticks. I'd have been mad I didn't already have it. So you might think that, okay, the bulls now could keep the leash if they can keep it above 49.25. Know where you're getting out before you get in. So if you get long, obviously this exercise, you're getting out where you're getting in. But if you're trading this thin spot for real, ultimately below 49, you're wrong. So let's say this market comes down like it is, right? You could rest a bid to get filled. I'll let it go offer bid, offer bid. There. Now in the exercise, I got to scratch it. Scratched it again. Take the pressure off you and just get good at scratching. Not in real life, just as a matter of muscle memory. And then you'll feel like what a good spot is. If it's easier to scratch, like it's easy to scratch this one. They're filling me slow, but so it's easy to scratch. I think I bought 2, sold 2. It was easy to scratch the 49.75 and the 50 evens. Why? It's probably because the upside's the right side. And if it's not, I'll know it before it goes to 47. So the goal of this exercise is number 1, and write this down because I don't have bullet points for it. Number 1, the goal. Now you know what the exercise is. Play it from one side or the other. You could go as deep as you want, meaning If you see a thin spot support, then play it from the long side as it approaches. If you see consolidation, play it from the long side at the bottom of consolidation and the short side at the top of consolidation if you think it's going to continue to consolidate. So what you want to do, you can flip a coin. But your goal is to scratch, sell it where you bought it, buy it where you sold it. Know where you're going to get out before you get in. For this exercise, it's the same damn price. Try to avoid minus twos and see how many times you could stack your scratches. How many times have I scratched these trades in this exercise? All of them, except maybe two. The goal is, can you feel when it's easier to scratch than when it's not? See, I think that the short side's the wrong side, so watch what happens when I sell it. It's not going to be easy for me to scratch it. I think they can now, as they built out size in here, they could run this thing up. So they're not letting me scratch it. They're going to take these 5075s bid as they take the 5400 evens bid in the NASDAQ. It's not easy to scratch it. See how hard this is? It's only down to 300, 250. Even bid. They're going to take them bid, right? Made it hard to scratch. In fact, I couldn't. I probably should just buy these, so I will. Take a -1. Why is it harder to scratch them? Because we're starting to break out. If you wanted to buy these for the breakout, that's fine. Buy these 5075s, but you have to scratch them. See how easier it was to scratch the long than it was the short? This will scratch in a second. Just takes a second to catch up on demo. There, +3 went to even. So go back and watch this on recording if it kind of went too fast, because I know when I click I'm long, but I could see it up in here. So how did I know we were breaking out? I didn't know. I just stacked probabilities because I didn't think we'd break out right away in here, but I knew the bulls took the leash, and I seen this volume accumulate, and we couldn't break lower, and the NASDAQ started moving up. So we started moving up. And you guys got to know the whole concept of there's two ways to buy. You could rest a bid or lift an offer, right? There, I bought the 51 evens. I'm going to be able to scratch them. If this demo wasn't slow, it would have scratched. Nope. I can't buy them at 51 so easy. Interesting. So I take a -1. They're not filling me so easy. Why is that interesting? Now, you don't have to do this. This is the feel that it's going to recreate. When you use demo and sim properly, the feel that it recreates is you don't actually have to do it when you're trading for real to understand how it feels. That's your other goal, because you would have done it in sim. Does that make sense? You've practiced it in sim. You've seen that if you did buy 51 evens, it would have been tougher to get filled on a scratch. So it might have to rotate down a little bit. So some of these, I mean, for some of you guys, you see the extreme value in this and some might not. Just trust me when I tell you, it's a Mr. Miyagi moment. You don't know what and why painting the fence would be helpful. But then you put all these things together. You're trying to practice the feel. Those are mechanics. The results will come, but you got to practice the mechanics. That's why, see how 51s, it comes down a little bit? Why are we due for a little pullback? Because the exercise made me feel that it wasn't easy to scratch it anymore from the long side. Well, in real life, you're not going to have to do it to feel like that because you've practiced it that way. I sold 50.75s, and it's not easy to scratch it, but there's only 190 here and 400 there. It's easier to scratch it. See how it's scratch, you know. And I was just playing it because we're probably due for a little pullback to 50. I don't want you to trade micro necessarily, but I want you to be able to think micro. That doesn't drip back just yet. It's just doing nothing. So your first goal was what? The first goal is to get a feel of how easy it is to scratch, stack the scratches, feel how easy it is to scratch, and then how easy it is not to scratch it from one side or the other. So then when you get into the market for real, you could recreate that feel. This 50 quarter now is starting to become support. Then you'll get an idea of why I thought that the market, the bulls, had taken the leash in here before it did all this. What would that have got me to do? It wouldn't have gotten me to buy it necessarily, but it would have kept me from trying to sell it, for sure. That's first. So if I was still bearish, I would have stopped trying to sell it. Then you've seen this ancillary affect what we're doing in here. And that's it. Recreate the feel and use sim and these exercises to recreate that feel of what the market's doing, and screw the results. I don't care what, oh, I'm trading well on sim. That means nothing to me. And it should mean nothing to you. And I don't think that you sim trade to practice. I think that we're all big boys in here. I think that you sim trade to practice. Here's my point. You sim trade to practice the right drills and the right exercises that we lay out in here, but you don't sim trade a strategy. We're all big boys. You gotta put your strategy at some point to work in the market. Cut your size, trade one lots. If you want to practice and use drills to practice your strategy, fine, but just don't practice your strategy and demo full on out, meaning you're always trying to make money, and then once you start making money in sim, then you'll move over. Because guess what? When you're making money in sim, you should have already been trading in real. When you make the flip over, that's when the market isn't as conducive to your strategy as it was when you were trading it in sim. It's one of the reasons why that problem exists. Take your strategy down to a drill and practice it this way. Where if you're going to try to buy it to get long support to qualify it, do it. Not once, though. Again and again and again and again. By scratching it. You know, most people will say, okay, I'm going to practice this buy against the thin spot. And they're going to practice it in sim and do it just once. It didn't work. I took a -3 and about, You practice it by saying, I'm going to play it from the long side and keep trying to scratch it. That's the goal. That's the drill. Know where you're going to get out before you get in. And ultimately, thin spots are to be used as not the exact moment or the exact price within the thin spot to get in, but knowing below it that you're wrong, get the hell out. Or at least that you're wrong. All right, guys. Well, I have built it up. Let me stop the recording 1 second.